It's 10 a.m. in Lagos, Nigeria. Welcome to Business Morning, 55 minutes of current and relevant business conversation. That's what we promise you here. I'm Edie John Mekwa. Let's start off with what's going on first in the global oil space. Brent crude futures held above $90 a barrel on Tuesday, while investors await macroeconomic data that could indicate whether interest rates will rise further in the United States and Europe, and the repercussions that it will have for oil demand. November Brent crude futures rose 28 cents to $90.92 a barrel, while U.S. West Texas Intermediate crude futures for October edged 35 cents higher to $87.64. Brent reached $90 a barrel last week for the first time in 10 months after Saudi Arabia and Russia announced they would extend voluntary supply cuts of a combined 1.3 million barrels per day until the end of the year. Traders would be watching August U.S. Consumer Price Index data, which is due to be released on Wednesday. There's also the one from the UK, and this could determine how much further interest rates rise in the world's largest economy and biggest oil consumer would go. The U.S. Federal Reserve is widely expected to leave interest rates unchanged at a policy meeting next week, though views are split over whether the Fed will raise rates or pause again in November. The medium-term outlook for oil remains bullish, with China reporting better economic data. And let's go what's going on in the grains there. We can tell you that Chicago wheat edged higher on Tuesday as the market took a breather after dropping to its lowest since late May in the last session, with large supplies from Russia weighing on prices. Soybeans edged lower while corn was almost flat as traders adjusted their positions ahead of a key U.S. government World Supply Demand Report, which is due later on today. The most active wheat contract on the Chicago Board of Trade was up 0.3% at $5.86 for half a bushel. Corn was unchanged at $4.85 for 3/4 of a bushel. Soybeans lost 0.2% to $13.66 for half a bushel. Russian wheat export prices inched lower last week, tracking global benchmarks as analysts continue to raise crop and export forecasts for this season. The price of a 12.5% protein Russia wheat scheduled for free on board as FOB delivery in October was $240 per metric ton last week, down from $245 a week earlier. The weekly condition ratings for the U.S. soybean and corn crops declined in the past week, hovering at their lowest levels in a decade as dry conditions expanded, according to government data. Well, we come to Nigeria, where the Nigeria Electricity Regulatory Commission has launched a real-time power outage reporting system, which is aimed at addressing electricity disruption and consumer complaints across the country. The chairman of NERC, Sanusi Garba, who made this known to journalists in Abuja, said that the app will assist the power sector regulator in monitoring and ensuring that distribution companies comply with set tariffs. He explained that the app is in line with the Commission's mandate of introducing regulations that protect the rights of consumers. The NERC boss also mentioned that plans were ongoing to put smart meters on feeders for accurate data or near real-time data, adding that the Commission has discovered that the discos are complying with obligations in real time. And yesterday we had that great news coming from the United Arab Emirates, as we know that the UAE has now lifted its ban imposed on Nigerian travelers about 1 year after that ban was imposed. The decision was reached after President Bola Tinubu met with the UAE President Mohammed bin Zayed Al Nahyan in Dubai yesterday. We had a statement from this presidential spokesperson, and we also had this interview with him.
Put in place new measures that would ensure that there is effective diligence done on the part of both sides. That's the UAE authorities as well as the Nigerian authorities in making sure that any Nigerian citizen who is seeking to travel to the UAE, for example, is being thoroughly scrutinized, not in a way that is prejudicial, not in a way that is presumptuous or negative, but in a way that ensures that well-meaning citizens, people who want to go do business, or people who want to get an education, or people who want to participate as active and productive citizens, in those domains, that they are those people. But then to add new dimensions to that relationship, a partnership that are mutually beneficial to both nations. And I think as we move forward, the details of those investments, the details of the foreign exchange liquidity program that's been jointly agreed to by both countries will become clear. And I do want to add, this was not in the statement earlier today, I want to add that there are ongoing kind of dotting the I's and crossing the T's between the respective ministers from both countries, as well as the national security advisors of both countries, as we really formalize kind of the more minute details of the agreement. But those details will be made available as soon as that's done.
All right, it's time for commodities, but we had Mr. Ngilale there. He's supposed to be on the program live today, but I think they're on their way back and all of that, so we hope to have him on the program tomorrow. Remember, we have about $14 billion investment pledge from India, and then some of those details that he promised right there from the UAE, we hope to get that out of him tomorrow here on Business Morning. But let's move on to the commodity space now and see what's happening, even though I guess our guests, Bolanle Agbaje, Senior Analyst of Financial Derivatives. I know you're happy about that. I don't know if you go to Dubai a lot or the UAE, but I mean, that's a relief for a lot of Nigerians who go there to buy commodities for resale here. Yeah. So I think that will also, that's good news for a lot of people.
Extremely good news, adding to our transport, places that Nigerians can actually go and, carry out different businesses and business opportunities. And I hear they're also trying to, bring in some sort of investment into the country. So that's, welcomed for us at the moment. And also, in particular, when you're looking at Emirates, that's their major airline there, that adds more competition to the existing pool of airlines that we currently have in Nigeria. So that's good for us.
Yeah, and I think that's a more budget friendly. I know a lot of Nigerians
usually love, Emirates. So it's great news for those Emirates users.
And it's good news for them too. They also get to make some money from the Nigerian population. Now, the Naira hasn't found its feet yet. Talks of redenomination, rebasing, whichever big word you want to use. It's filling the air.
Yeah, so there are rumors about redenominating, the Naira. We don't know how true that is, but what we know from the theoretic aspect of it is the fact that, when countries look at rebasing their currency, it's usually because of hyperinflation. So that's inflation of about 50% or more. We haven't really gotten to that point yet. And currency devaluation, which we're currently facing at the moment. And also maybe the country is joining a currency union, just like the Eurozone. So that's when you talk about rebasing, a currency.
I think Ghana did it some years ago.
They did. But for Ghana, it worked in the short term. But, looking at the long term, they did face, or they were back to almost status quo. And that's just because when you're rebasing a currency, it's not just that. That's, one side of the coin. You also have to implement other policies to support and corroborate that, existing policy. So are you increasing GDP within the economy? Are you boosting, the current levels of the economy, to complement that, high currency level that you're changing it to? So rebasing is usually just removing, 2 zeros from the Naira. So that would mean, the combination of Naira in correlation to the dollar obviously changes. And
what does that mean in practical?
So in practice,
like 1,000 is going to be equal
10 to 1, dollar. So currently, I think the exchange rate is about 947. So that would mean the exchange rate would become 9 Naira or 9.47 Naira to $1. So that's.
Sorry, it sounds artificial because just as we see from what happened in Ghana, if you're not careful, you just do that and we celebrate it and feel the euphoria, and then we are back because we have to deal with the basics. We can't run away from it.
We definitely do. So what it means is, you know, for somebody in the market, are they ready to accept, you know, what was worth 1,000 naira, for example? Are they ready to accept 10 naira for that same product? You know, so there has to be a level of education,
high level of education. Well, there'll be a lot of fight
that needs to be passed across to the economy, and also boosting our supply levels, increasing our exports rather than imports. So in any sense, there will be less reliance on the dollar, the need to keep changing to the dollar to, you know, make purchases. And that's the fundamental issue.
It sounds to me that there should be a lot of steps taken before we go to the rebasing.
Yes,
if we just wake up and do the rebasing, then it might just come as, you know, the president announced that there's not FX is unified, and yet we don't have it.
I am sure that, you know, they've learned from the redesigning that was implemented, you know, last year, and they would. I don't think it's a rumor. We're not really. It's not confirmed. Nobody knows where the story is coming from. Nobody has mentioned it.
It's been so right these days, you know, from a lot of economic quarters.
It could be because, you know, it was suggested in 2007 by the Soludo, you know, administration, and that it seemed like a policy that some people appreciated. And now that we're faced with even worse situations at the moment, everyone is looking for ways they can, because the spread now from the parallel market to the IE window is almost 200 naira. And
so what was the essence of that unification
because
policy?
Those fundamentals are still not there. We're still heavily reliant. Everyone is converting their money to dollar. They feel like, you know, having their money in dollars is a safe bet as opposed to the naira. And that's because there's lack of trust in whatever, you know, policies that are implemented at the moment. So it would be nice to have that, but implemented the right way, because it's not a bad policy to implement.
The steps taken prior to that is very necessary, or else it would just be another waste of policy, beautiful policy. You know?
Definitely. But with what the ongoing administration is doing now, it doesn't seem like they would, you know, immediately implement such.
Because we have a law, we are still dealing with subsidy and palliative
and labor
strike.
But I can see how, you know, redenominating the naira could solve, you know, alleviate some of those problems if, you know, there's trust in Nigeria and in the naira, and, you know, you have more investors coming in and changing their money to naira and, you know, making such investments.
Talking about investors, the bad news we had yesterday about the NGX, I don't know if you saw it. Reclassification of the NGX, you know, not a very good one. That, of course, will send negative sentiment to around FDIs, and
we definitely don't need, you know, more bad news, especially around the stock market situation, and having that now and more or less communicating such bad sentiments to investors at the moment is not necessarily great. But going forward, hopefully we'll see what new policies, you know, the administration is going to come up with. The UAE situation is great for us. We've sorted that out and we can now move on.
The Indian situation we're waiting for.
And even with the UAE, I hear there's some investments coming in. It would be nice to see the nitty-gritty of what, you know, those investments entail.
Yeah. All right. But it would have been a very good time for Nigeria when we have Brent above $90.
Yes. So the supply cuts are really doing wonders for us.
Yes.
We're still benefiting with that.
I think our production was a bit up.
Yes,
August.
Yes, but I think it's currently at about just slightly above 1 million barrels per day. But we're still struggling because we're not even up to 1.6 at the moment. The oil theft,
1.8.
Yes, the oil theft issue, I think they're still solving that as well. I think the government is looking for ways to make sure that our supply is increasing significantly so we can benefit from that. But all in all, the high price complements the loss in outputs that we're seeing. And hopefully this is able to stay for as long as we can. Although it's the same trend, you know, when Saudi, Russia, when they cut output, you have a situation where prices increase for a short period of time. And then it stabilizes and even probably goes back, because that affects demand as well. So once you see that significant drop in demand, prices, you know, go down again. But 90 is welcome. It's nice.
It's nice. Yeah. And hopefully we're not paying any subsidy. Because that would
we don't know what's behind, the fine
hopefully
print.
We're not paying any subsidy.
I hope that's not the case. But we're seeing prices increase marginally across board, or petrol prices rather. You're seeing up to about 600 in some states. So
really,
yes. So I guess that's
but we have
that
NNPC at least in Lagos at
568, which is still in line with what is happening. So as you see prices increase, you expect to see petrol prices or domestic petrol prices increase as well.
That's why we're waiting for Dangote.
He's coming soon.
All right, so what else is happening in the commodities space?
The commodity space, cocoa is actually above $3,500 per metric ton.
Us.
Amazing
Very
for
good.
us. And that's just because you're seeing supply shortfalls in Ghana and Ivory Coast. We had mentioned last week as well that, Nigeria was also suffering some lower supply for this particular harvest season. And that's because of the heavy rainfall. But the higher prices is obviously nice to complement that. So going forward, we expect that cocoa prices reaches about 4,000. That'll be huge, and that will definitely add to our reserves for sure.
All right. What about domestic?
Well, with domestic, prices are still stable, but we're seeing signs that the prices would begin to drop. We're currently in the harvest season, and the fact that demand is not really there. I'm sure you can feel it in the air when you look at your own personal basket that usually, or your budget for the month, that has obviously reduced significantly. So we're not seeing prices increase so much, especially for more elastic commodities.
And I hope the flood won't be a big challenge as it was last year. Last year it's dealt a huge blow on farmers.
It will for the commodities that are being planted now. It will definitely affect some of those, that supply. But going forward with this particular harvest that we're seeing now, we're not seeing that impact. But whatever happens in the short term is what we would watch and see. And hopefully the rains, we hope it doesn't last for so long.
This morning was really surprising.
It was really heavy.
Yeah. Well, thank you so much, Bolanle Agbaje, Senior Analyst, Financial Derivatives Company.
Thank you for having me.
Let's take a break. We'll come back with more conversations here on Business Morning. Welcome back. The ECOWAS Regional Electricity Regulatory Authority is the regulator of regional cross-border trade of electricity in West Africa, and the commitment of ECOWAS member states to achieve electricity interconnections for the pooling and sharing energy resources in the region, and is translated into action through the adoption of a number of provisions to establish appropriate legal and institutional framework. Now, this body, ERERA, did meet in Togo some days ago, early this week, and they got to talking about the framework of making this work and the importance or the essence of having a cross-border electricity supply among ECOWAS countries. We have joining us to bring us up to date on that. Joining us virtually from Zanzibar in Tanzania, a council member, he's an economist also at the ECOWAS Regional Electricity Regulatory Authority, Dr. Haliru Diko. Good morning, Dr. Diko. Thank you for your time this morning.
Good morning.
So over there in Tanzania, I think you're about 2 hours ahead of Nigeria. So I guess this is afternoon for you. But bring us up to date, the last meeting you had in Togo, Lomé, Togo. What are some of the high points of that meeting?
Okay, thank you very much. I hope you can hear me loud and clear. I
can hear you, not clear, but loud.
Thank you very much. So I'm in Arusha, Tanzania. We are attending a meeting on the African Union programs on interconnections of the Africa. So, well, that is part of the infrastructure programs, and that is being pursued all over the world. We are trying to connect a sort of the entire African region is to create what we call the single electricity market for the region. Well, coming back to your question, first, it's a pleasure for me to be on this program, and I bring my well wishes to all the listeners of Channels Television all over the world. Yes, Herrera is doing a lot of consultation to come out with the best regulatory framework and policy to move the West African sub-region out of darkness we are in. We need to be in line with all other parts of the world. So at the last meeting we had, which was held in Lomé, Togo, we discussed a number of issues to move the sector forward. First, we are making preparation to the next meeting of the Council of Energy Ministers, which we hope will hold in Cotonou in October. So preparatory to that meetings, we have to discuss with all the stakeholders. The stakeholders here include the ministries in charge of energy, the national regulatory authorities, and the utilities. So we discussed with them about 3 key issues. Number 1 is the funding of Herrera. That is, Herrera as an independent regulatory authority need to be funded not by the government of West African countries, but by the utility, but by the consumers, so that the Herrera, like other regulatory institutions in the world, can function better and effectively and deliver and make sure that we are fair to the consumers. At least we could protect the interests of the consumers, and also we provide an open environment for the investors to come into the market. The second issue is the issue of harmonization of licensing terms and conditions. That has also been, that's one of the issues we discussed, because we believe, and it's a key to the success of any electricity market. The issue of licensing terms and conditions, that is the issues of who come into the market, and the issue of how do we exit the market, all these are critical. So these are some of the things we discuss. Although Herrera will not issue the license, but we have to harmonize what other African and West African countries will follow in issuing the license, like what Nigeria will use, the terms and conditions Nigeria will use, the terms and conditions that will be applicable to Ghana, Cote d'Ivoire, to Senegal, to Liberia, to Guinea-Bissau. All these countries must be, we want to still speak together with the same hand, with the same mouth, and we have the same terms and conditions for anybody who is coming in to be participating in the market. So these things we have done, and if we go to the Council of Ministers of Energy to deliberate, when they approve it, it becomes a law within the West African sub-region. The other issue is the issue of market monitoring. When you have the market, you have to monitor the performance of the market and also conduct a sort of a surveillance to ensure that, yes, the rules and regulations you have in the market are really working. And you have designed something which is a sort of, not a Chinese wall, but a sort of something very strong, concrete, that yes, the market is working. Those who did not follow the rules and regulations will be sanctioned, and the sanctions are going to be heavy to ensure that, yes, to monitor, to ensure that, yes, compliance is the key, because that is the only way you can develop a monopoly market. If you remember, electricity market is a monopoly. So a monopolist will always try to undercut, and certain extent cheat, and maybe they will not be keen into providing the required quality of service. But those licensing terms and conditions, the market monitoring and market surveillance document will ensure, yes, the market work the way it's supposed to be. So these are some of the things which we discussed at the last lobby meeting, which is part of the consultation which Herrera's always went through before we come out with any regulations or shift or changes in the policy of the energy within the West African sub-region. Thank you very much.
Yeah, thank you, Dr. Diko. But just before we let you go, the issue of after and making after works, I believe that's also a component that comes in when you talk about cross-border electricity.
I didn't get the question. The issue of
after African Free Trade Agreement.
Yes. Okay. Well, the African Free Trade Agreement, is one of the things that that within the continent of Africa, people can move their goods and services without any restrictions. So it's key. Electricity is key to the effective participation or taking advantage of taking advantage of all the benefits of having a single trade organization like the one we are having. So electricity is key because that control your cost of production. To a certain extent, most of the manufacturing industry find out 30% of their cost of production is electricity. And in commerce, you find out a margin of 30% is very critical. So if you can get a cheaper and available energy, electricity, that will increase your competitive advantage. So I think that are some of the things we are trying to, already the ACTA, the ACTA is already has been established and is hosted in Ghana. And now the African single electricity market is also trying to complement. But we, from the West African sub-regions, we have shortage of energy, and that will make our cost of production a little bit on the high side. So we have to take all the measures required to ensure that, yes, there is electricity in the region, so that we remain competitive and take advantage of all these economic activities. Otherwise, we'll continue to be dominated.
All right, Dr. Haliru Diko, thank you so much for your time. We do hope to have you back on the program when we'll have a better outlook of that. The council member and economist at the ECOWAS Regional Electricity Regulatory Authority.
Thank you. It's my pleasure. Have a nice day.
You too. All right, now let's move to the markets now. And yesterday, the market was in the red, but that's not a source of worry for us because we know it's just profit taking. When the market goes up, then there's profit taking. The source of worry from yesterday was the downgrading of the NGX, and it's pretty serious from our perspective. But Will Ibong can tell us more about that. Hi, Will.
Good morning, Ini. Before we delve into that worrisome matter that, but someone, I did speak to that analyst and he said, oh, we shouldn't worry about it. It's just one of those downgrades that we get from this, foreign.
Maybe it's just trying to comfort us because, I mean, a lot of international investors, they do look at this grades and reports and ratings, to make their decision, especially institutional investors.
True.
And these are the people who bring in the bulk of the funds that Nigeria is searching for at this time.
So the thing that I feel he feels we should not be worried about is because we've not had a lot of portfolio investments in terms of foreign investors for a while now. So the market has been predominantly dominated by local investors, domestic investors.
But we do hope to attract foreign.
We do hope to attract foreign, but with the current FX situation, the scarcity in the I&E window, this is what has informed the FTSE Russell to make that downgrade, and we just hope that it's lifted. So what's worried is because they said we'll be termed as a new market. It's like, are we starting all over? Maybe the analysts will give us more insight.
Just when we're celebrating the NGX last week. Yeah, NGX was, I think, the second best
performing in Africa, and then we're getting this report.
This.
It's more like,
so, I mean, it's so contradictory. Yeah, and the CBN did promise to take care of the backlog of FX. So we haven't had updates on that.
We've not gotten an update on that yet, but we do hope that this is resolved so that we are back. Maybe maybe a conversation can be had with the FTSE Russell. Maybe there's an error somewhere.
You hope.
So trading, kicked off yesterday on a very positive note, bearish sentiments, and this is on the back of profit taking. We can't expect more from the market except investors trying to take profit. I mentioned yesterday that it's back to school period. Parents, investors are trying to take money, to pay school fees and other things that they have to take care of. We saw GT Coal going down yesterday, 8.6%. Dangote Sugar was one of the big culprits yesterday, and Zenith Bank also down 5.8% yesterday, and that really broke the market to close at 1.24% down. And the market cap at the 36 trillion naira mark. But let's look at how this volume traded yesterday. We did see 8.34 billion naira traded yesterday, volume 520, deals 9,916. But we're going to quickly talk to Onose Sotie now. Is going to give us more insights as to what happened in the market, but basically to give us an explain out as to what the FTSE Russell means about that downgrade. Good morning, Onose. It's good to have you on the program.
Good morning, Will. Thanks for having me.
Onase, I'm sure you had a conversation. We're just talking about this downgrade, a further downgrade. See, we're on the frontier level before. Now we've been reclassified to, an unclassified market status. This is quite worrisome for me, but I did speak to someone else and said we shouldn't be worried. But what do you think? What's your take on this?
Well, it's not a great place to be. But then again, like you said earlier, it's not something that has an immediate negative effect, right? So what the FTSE does is it creates a lot of indices that the financial markets could use, a lot of institutional investors could use, to invest in to track various markets and various market segments. Now, if you look at the frontier markets, now although now stocks from the NGX appears on about 5 or 6 of the FTSE's indices, but everyone is talking about the frontier market. If you look at the frontier market, now stocks from Nigeria constitute about is it the third or fourth, in terms of weighting, about 9-point-something% behind Vietnam and I believe Bangladesh. So Nigerian stocks make up quite a significant portion of the frontier market. Now, unfortunately, other institutions, especially global institutions that might be looking to frontier markets, because frontier markets have the ability to generate, I guess, higher yields or higher returns than some of the more established markets, depending on the macroeconomic conditions in the world and in the developed economy. So now institutional investors, now a lot of them just rely on these indices, because it's cheaper than having to come up with your own mathematical structure or mathematical way of tracking the stocks and the markets for various countries. Now the problem with this now lies in the fact that a lot of institutions, when they want to now look into frontier markets or emerging markets like Nigeria and basically like Nigeria, our country or our stocks will no longer show on these frontier market indices. So basically, it's just kind of make Nigerian stocks a little harder to find, for institutional investors that are not already aware of our stocks or the situation in our country. Another repercussion might be the fact that this might now be a signal to foreign investors that the investment situation in the country is not ideal, because if a major investment management company like the FTSE Russell is saying, okay, we need to get these guys off our list because institutional investors are saying they cannot repatriate their funds, then other investors, maybe even foreign direct investors, might now look at that and go, so if investors in the capital market can't repatriate their funds, what's the guarantee that we can repatriate our funds if we invest in this, in this market and in this economy? So those are, on the surface, those are, I guess the two main issues that the updates might have on the market. But then there's now like another hand, where some might say, okay, it's like I said earlier, some analysts might tell you it's not exactly a bad thing. Even this morning I was discussing it with the senior colleague, and he said, it's a good thing. On one hand, that might insulate our market, because if you look at 2022, that was last year, I believe. Last year, the S&P 500 declined by about 20 to 22%, which was significant. One of the most significant declines since 2008, or even the Great Depression in the 50s. And if you look at a lot of markets, a lot of equity markets, even around the world, a lot of them declined last year. But the NGSE, or the NGX rather, the NGX ASI closed the year at around 19.89%. And that's because there was significant FPIs flowing out of the market. So that kind of now insulated the Nigerian market from a lot of global economic headwinds that normally affect the market. So on one hand, we say, oh, FPI, we might see further FPI outflows, from our market because, investors, they want to be, risk-averse investors are like, we don't really want to deal with the FX situation. And on the other hand, that might now end up insulating our market so that, when, if anything happens in the global space, maybe recession or one thing or the other, that might not really affect the Nigerian equities market as much. So you have investors looking at that and thinking, okay, so that's one of the positives of this happening.
So that's always had its good and the bad side of it, but it's something I just want to understand better, and I'm sure a lot of people want to know. The FTSE Russell, they say that once Nigeria is able to clear its FX delays, the backlogs and every other thing, that we will be class assessed as a new market according to the FTSE equity country classification process. So is it that we will be, we have to sign up again as the NGX? What is this about? Can you just explain this?
Okay, so like I said earlier, this isn't exactly shocking. It's not new news because even since September, I think the 30th of September last year, Nigeria's market has been, under consideration for, reclassification. So it's actually been a while. Now FTSE has actually been considering this for a while. So there's usually that period for what is called the entire process is called reclassification, basically. So now we have been reclassified to an unclassified, I guess, moniker. Now we have a $10 billion FX backlog of investors, investors and in the market. The FTSE is saying, look, if you guys can get, your FX situation under control and show us over a certain period of time that the FX situation is stable, because last year, when we were under reclassification, they didn't just, unclassify us then. They kind of watched our market, to see what will happen. And then when we floated the currency, a couple months ago, they kept watching to see if that will have, a significant effect. And it's because they now believe that, look, you guys have floated the market, and while, yes, your I&E window now better reflects, the parallel market, there's still the supply issue. So the supply issue that plagued the market before is still there. So they believe that, okay, even with this FX issue, with the whole willing buyer, willing seller system actually being implemented at the INU window right now, it's not having the results that, it's not generating the results that would naturally keep us on that list, or that would allow institutional investors to adequately use the index that FTSE has created, or all the indices that we are a part of, which is and that's really the problem, is that investors have issues now basing their own ETFs on those indices. And if that becomes an issue, then further down the line, that might not be an issue for FTSE itself, with the validity of their indices when it comes to either ETF sampling or full replications from institutional investors. So now what they're saying is, look, if you guys can get your FX under control and show over a period of time, maybe a couple of months or maybe a year, that look, our FX situation is now stable, then they can now say, okay, now when we see that, when you have proven that, we'll happily start another process of reclassifying you, and maybe putting us back into the frontier market, or putting us into another category.
Okay, thank you so much, Nose Asote Naolo, investment analyst, Main Street Capital Limited, for sharing those insights. It's much needed at this time. The FTSE Russell is going to be watching, and we also will keep watching to see how this pans out. Thank you so much for joining us on Business Morning.
Thank you for having me.
So, Ini, I can't, go without talking about, Zenith Bank's over 15 billion, dividend announcement yesterday. That was a shocker. Yes. And, it came from, it's on the back of this FX revaluation. And then the CBN did release that circular saying that banks should be watchful, be in a hurry to just dish out this dividend.
The gains of FX.
So, because they're seeing something ahead, and, the banks
the CBN has a plan that is going to, bring stability
to the Naira.
And, slim the gap between the parallel, and
I mean, they did promise that they were going to deal with the backlog, and honestly, I said it's about $10 billion. That's a whole lot.
Lots of money that's going to be going into the system.
Perhaps we should head to the Niger Delta and get a lot of crude and just sell it.
First of all, let's receive the dividend from Zenith Bank. Then we can talk about that.
All right, Will, thank you so much. Well, let's head to London now and see what's going on there. And I think the first thing to say to Juliana would be congratulations, because we did see that the grocery inflation has cooled to the lowest in a year. So, I mean, Juliana can shop as much as she wants now, and the girls will be happy for that.
Good morning, Inni. You're right, all the shopping does go towards the girls, not me. And as you know quite rightly, Inni, you probably know it more than me, data can distort. So we have had data this morning in the UK from Kantar. Kantar is kind of like a retail expert analysis assessment piece of apparatus, and they have been looking at grocery price inflation. And you're right, congratulations are kind of in order, because month on month grocery price inflation has fallen by 0.5%. Unfortunately, it is still very, very high. So grocery price inflation is now, I believe, at 12.2% for the month of July. In June, it was 12.7%. So what we've been seeing in this country over the past 6 months is that it has been gradually falling, but that 12.7% is 12.7% higher than it was this time last year. So it is still very difficult. It's still very expensive for people to buy their groceries. Kantar also realised that some of the discount European stores like Aldi and Lidl are increasing their market share. I believe it's pushed up to about 18%. And that's because a lot of consumers are finding it much easier to buy discounted items at those stores. You'll also remember as well, Inni, a couple of months ago, the Chancellor hauled all of the big four grocery bosses in front of a parliamentary select committee to discuss why some of the prices, some of the reductions at wholesale weren't trickling down to consumers. That has been trickled down, and we can see that within the data. But according to Kantar, 95% of people, so the vast majority of people shopping in the UK, are still worried about their grocery bills, on top of their energy bills, of course. But we'll take at least one glimmer of hope is that it is falling. So hopefully by Christmas we'll be able to have a turkey.
Not like last year. But this story of wage growth being at par with rising prices for the first time in 2 years, what are the implications? What does it mean in reality?
Yeah, this is pretty significant. And I think now, all eyes are on the Monetary Policy Committee. They meet next week, Thursday, at Threadneedle Street to discuss interest rates. The sentiment this time last week was that perhaps we had seen the end to the hike in interest rates, currently at 5.25%. Of course, we know Andrew Bailey, the Bank of England governor, is doing that to combat inflation. But unfortunately, if you are somebody that has a significant loan in the UK, like people who have large mortgages or those who have really expensive cars and they're paying that back every month, you are going to see your monthly payments rise. And the reason why we're now expecting a further hike next week is because, as you said, we have had labour market data today from the Office for National Statistics showing that for the first time in, I believe, about 18 months, wage growth has stripped the level of inflation for the month of July. So CPI in the UK currently at 6.8%. Wage growth for the month of July has come in at 7.8%. So that is much higher. Basically, people have more money to spend in their back pocket. That doesn't mean it's not expensive to live, and we're not going through a cost of living crisis, but it does go to show that your purchasing power is much more expensive. And we know one of the reasons why it's been taking such a significant amount of time for the government to negotiate with union bosses is because of the fear of higher wages, which would spiral inflation out of control. So you're right about talking about the implications. This data has just come in. Expect some market movement at intraday. So good for consumers. Not great for the Bank of England, not great for the millions of people who are already struggling to pay their mortgages.
Yeah, always a mixed story. One side of the coin is the opposite of the other. But thank you so much, Juliana. And we'll certainly talk to you about the markets at 1:30.
Absolutely, thank you.
All right, talking about fear right there. Let's see what the fear index
it's all about.
Yes, not a fear greed index anymore,
Right.
just a fear index. That's what this market has been giving us. So let's just call it fear index.
Let's just call it fear, and it's really red this
really
morning.
Red,
looking at that
red.
fear, the color right now, just as red as in his blouse there, or dress. Yeah, really red. That's what we're seeing for fear. The market right now showing that traders are quite. There's some skepticism there, right there in the market. Let's look at the top cryptocurrencies we track now. We see Bitcoin there, 0.72% down this morning. Did fall below the 25K level, but a sharp recovery. Don't know what drove that. No news pushing that up. 2.25% Ethereum down. The XRP losing that 50-cent level, 1.98% down. So what we're seeing for XRP. If we look at the top gainers now, we see TWT there, top of the counter, 8.32%, 81 cents. And we see Optimism there, $1.33, 4.53%. Seen some action there in the OP protocol that would huge volume coming in there, and that's what we're seeing, that big jump this morning, 4.53% of that news. GMX, $31.67, that's up 1.17%. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume, good morning.
Good morning, laddie. Good morning.
Yeah, got that news from France. In France yesterday, it said that finfluencers, that's those that influence products that have to do with investment in France, they'll have to get a license, to be able to do that at this point. How are you seeing that news, and do you think other countries would also take this step?
It's long overdue. It's long overdue, and it's making a whole lot of sense as far as I'm concerned. So, if you're going to be speaking or doing advert, I beg your pardon, influencing anything that has to do with finance in that part of the world, you need to have some level of certificate. And apart from having the certificate, you have to also work hard for the certificate. You have to go through a course, and a short course. And after that, you have to at least score above 75%. So that means it is serious business as far as I'm concerned. We have seen how celebrities, even in the US, try to influence people and they lost millions in dollars. So for France jumping in this, maybe others can jump on this as well. Not just about crypto now, also these influencers that are involved in financial stuff around equity, bonds, exchange traded funds, derivatives, and most especially cryptocurrency, which is a new asset class right about now. So it is good that this is coming. Peradventure, some other client might copy it. It's good you copy something that is good. We have seen in our own part of the world that even through religious houses and all, people are being influenced to get in digital assets that are somewhat making them lose their money at some point. And I think this will be more like a clarion call. Now, the person that is telling you to go and get this thing should have some level of education. Thank you.
Quite interesting bunch of words there. We have finfluencers. All right, we're looking at the market now. Tomorrow, expecting that US CPI data for August. How are you seeing this impacting the market, or is it priced in already?
Laddie, the volatility for this week, if you ask me, we have to be very careful. It's really going to be high, most especially the one I'm really particular about, not the CPI now, particular about the FTX issue about repayments of creditors right now. FTX have been having an issue. FTX actually could be said to be one of the challenges we had in this industry from the dump, right? Mismanagement of funds by Sam Bankman-Fried. Right now, the court is to give a judgment on Wednesday about the approval for liquidation of funds to creditors, and this amounts about $3.4 billion. And the DOJ is saying that it should be delayed, but FTX current leadership is saying people need to get their money because a lot of persons lost their money. Even here in Nigeria, I know quite a few that lost their money, but we didn't want to do anything about it from this client. Peradventure, when we have regulation, better we're going to make that case. That 3.4 billion, if some huge amount of altcoins, for example, Solana is heavily involved in that, and Solana can accounts for about $650 million. FTT tokens about 500, Bitcoin $268 million. I think Ethereum has about 90 million, Aptos about 67 million, Dogecoin has 42. Then Matic has 39. So all of these put together, if they leave the altcoin market, which most likely gets blood from Bitcoin, there's going to be an issue. So this week we should brace up for a lot of volatility. So that is very, very important. CPI could come, you see some retracement in CPI and everything goes back, but that is very important.
All right, there are a lot of volatility expected in the market, but what are you seeing for that US CPI data tomorrow? New high?
I'm looking at a new high. Yeah, so we'll struggle through the year, and I'm not a bear like you always call me, but we'll struggle through the year
the bear.
to see how far the Fed could get up to their 2% target.
All right, we'll keep watching out for that. Thanks so much, Remy Ofi, financial market analyst. Thank you.
Thank you, Ladi.
All right, now let's flip over to the losers counter. So, Arbitrum there, it's topping the counter 7.80%, 77 cents down there. CFX, that's one of the China coins, 11 cents, did lose, been all the way down from about 20 cents. Clay, that's 5.77% down. We see Ape coin there, $1.15, 5.71%. So we're seeing big drops this morning with all the volatility we saw yesterday with Bitcoin falling below that 25,000 level. But we've seen a recovery, but some of these altcoins are taking long to recover at this point. So that's how the market is looking. Still quite fearful, and looking out for that US CPI date of August tomorrow. See how that
because I mean, already statements are coming out suggesting that there might be a hold at the next MPC. So we think the inflation should look friendly.
Hopefully
for there to be a hold.
Hopefully, and it gets really tricky when you're expecting data before the meeting.
Before the meeting, exactly. All right, Ladi, thank you so much. See you at 1:30.
See ya.
All right, so that is on the program. Thank you so much for being a part of this 55 minutes of current and relevant business conversations. And I know that the conversation started here. Of course, we'll continue right there, maybe in your home, in your offices. Or you can repeat this program, watch it at any time on our YouTube channel. That's youtube.com/channels web. 1:30, Ladi Williams will be back to give you update from the world of business. I'll see you tomorrow with fresh, very fresh episode of the program Conversations.